Do you ever wonder what trades professional proprietary trading firms encourage their developing traders to take? In this video, you will witness one of them in step-by-step detail. Hi, I'm Mike Bellafiore, co-founder of SMB Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and The Playbook. Let's get to work on giving you a glimpse of some of the trading that goes on inside of a proprietary trading firm.
This playbook is trade in Tesla. This trade was based on the breaking news event, which was Tesla being added as a constituent to the S&P 500. The trade idea started out with realizing for quite a while now, so Tesla is the largest publicly traded company, which was not including the S&P 500. This was because of their profitability requirements to be added as a constituent, and starting in their earnings reports of July this year, that was the first time that they had met the eligibility requirements for them to be added. Had they be added to the S&P 500, I would assume this would be a pretty bullish event, an event where Tesla would get bought up quite a lot just due to the credibility that's added to the company, as well as just all of the fund flows that come with being added to that benchmark. There are a lot of ETFs that follow the S&P 500, and these funds have to buy up stocks when they get added. Starting in July, as I mentioned, after the July earnings report, I just began to research into the process of how I could potentially time this trade, why companies are chosen to be a constituent. The research started out with making sure that Tesla did meet these requirements. So what are the requirements? What's the methodology for the S&P 500 for this benchmark? Company size just has to have a market cap of a minimum of 8.2 billion. The company structure, they have to be a United States-based company, and their primary listing has to be on an American exchange. Now, the portion that Tesla had failed to meet for quite a while, up until July of this year, was the profitability standards. Profitability had to be the most recent earnings report, the most recent quarter, had to have been profitable, as well as the sum of the prior 4 earnings reports. So the trailing 12 months have to be profitable, as well as the most recent quarter. And this is what Tesla lacked for quite a while, and the July earnings report put them over that requirement. So once they did meet these standards, and I knew that Tesla was able to be added, began to do some research into how could I time this trade. So the second portion of this research was the data collection and gathering historical data to figure out when to really pay attention, when to prepare for this trade. So it started with gathering examples, reviewed the most recent 100 S&P 500 index additions. And then for each of these examples, I wanted to look for what could help me better understand how to make this trade in Tesla. And that was understanding when these companies were added, why they were added, and as part of an exit strategy or planning on how large a size to take and how much risk to allocate for this trade was to review the reaction. Review the reaction in the minutes following, as well as the remainder of the after-hours session when these companies are added. The factors that I gathered, I briefly mentioned before, but these were the reasons for the addition. Why was the company added? Was that company already included in another benchmark? Were they in the S&P 400, the S&P 600? I found that to be helpful. Is there a certain day of the week that maybe S&P Global, the board who sets the standards, who adds these companies, removes companies from the index, is there a day of the week that they favor? What about the days until after their last earnings report? The days until the end of the quarter, days until the quarterly rebalance? Just try to gather some quantitative data to figure out how to time this trade. When would be a good estimate for a time frame where this could potentially happen? And then again, I mentioned the reaction, and that was the initial reaction. So the first few minutes after this news is made public, how much did that stock run? Did it run? Was there a period of consolidation after where you could have maybe added size or have taken off size, known to take risk off? And then was there a second leg? And if there was a second leg, how high was that extension above the initial reaction high? And how long did this take? Was there a delayed reaction?
How long did it take you to collect the data?
A lot of time. I did 50, 100 hours probably, at least. Went one by one manually and had to figure out the date in which they were added, why they were added, and then review qualitatively, take screenshots and understand these movements.
And what gave you the idea to research this?
One of the senior traders, actually, Dan G, brought this to my attention, and he said that he believes that Tesla could be added as a constituent, and he would like to understand, have they met the criteria yet? This was back in late July, early August. Have they met the criteria yet? And if so, is there a way that we can estimate when they're going to be added? And so I just tried to go through each data point that I could find that could help us understand if there was a time period that was more likely than others. Is there a high probability of it happening at a certain time compared to at random?
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
When collecting this data, all the data points I mentioned plus a few more, just realized that this data is randomly distributed, meaning that there was no indication that S&P Global, the board, favored a certain maybe days after an earnings report, days till the end of the quarter. There was no data point that was certain. The only thing that was certain that wasn't randomly distributed was that the announcement would come at 5:15 p.m. Eastern time. So knowing this and knowing that there wasn't a way to time this, starting in early August, I had to...
Jake, so when you say the only certainty was the announcement was going to be at 5:15 p.m. Eastern time?
Correct.
How'd you come up with that?
Well, when going through and just manually checking each addition to the S&P 500, there was this consistent pattern of the news being published to the newswire or to their website at exactly 5:15. And then after reviewing this data and noticing that that was the case, other, say, S&P 400 or 600 or even 500 additions that came before Tesla was ultimately added, they all did happen at exactly 5:15. There was no other certainty, but there was some sort of a leading indicator, and this was that when there was going to be a reaction and when the stock was bought up after the company was added to the S&P 500, there was this pattern of high volume. There's a lot of inflow. There's velocity of the number of prints coming across the tape would have a huge uptick in that minute bar. At 5:15 up until 5:16, you could have a leading indicator that if there was unusual volume, extremely unusual volume being printed in the after hours, that either this trade or that this announcement was coming in the next few seconds, or that the announcement was made public and I just hadn't yet seen it.
And Jake, what did you do to conclude that? Did you go back and just look at a bunch of S&P ads and watch to see the volume right around that 5:15 p.m. mark?
Correct, yes. So there was the quantitative and the qualitative side to this research, and the quantitative side was understanding the numbers behind the potential trade, and then the qualitative part was gathering these screenshots and understanding, is there a commonality between all of these additions? And that was a huge uptick in volume in the 60 seconds leading into the announcement being made public.
Okay, thank you.
Lastly, as I just mentioned, I have these screenshots and then the numbers. I was able to understand what a likely move was. But at the same time, Tesla is a unique scenario. It is a unique company, and I think we all know that. So rather than focus as much on prior S&P 500 additions, I took a look, which I'll show in the next slide, at were there any other after-hours breaking news events in Tesla that might mimic the movement that would occur if they were added to the S&P 500. Using 3 separate scenarios over the course of the last 12 months, I found these after-hours breaking news events where Tesla had a similar pattern, in that what I could gather from this, just at first glance, was that I could time the top of the initial reaction when there was a decrease in volume. As you can see in all 3 of these examples, the initial reaction, the high of the initial reaction, is either the minute bar or the minute bar following the highest volume. So what I gathered from this specifically was just that in part of planning my exit, I know that diminishing volume is going to be an indicator maybe to take some size off. So here's the chart for 11:16, the day in the after hours session, again at exactly 5:15, that Tesla was added. So in terms of the trade management, at 5:15, I have the RSS feed up for S&P Global's newsfeed, which is essentially it's published at the same time, if not a little bit less latency than they are published in newswires, and I'm able to see in real time that they have been added maybe before it's announced on CNBC or Trade the News or some other aggregator. And even before this had happened, there was that uptick in volume. There was huge inflows that had not been there before. Again, I had been watching the stock every day for the past 3 months between about 5:14 and 5:16, 5:17. The increase in volume compared to every day for the last 3 months was just undeniable, that this announcement was going to be made any second. So I was able to start to enter into the position. So I'm entering into the position, getting pretty low towards the bottom of this first candle before the announcement's actually made public. And then as the announcement's confirmed, then I have confirmation that this trade is actually happening and there's not just some large, anomaly. Double up. It took a lot more size. And in fact, I only have 2 additions here, but I was slowly adding also some more size as the price came up higher and the volume as well as the price action was sustained.
Is there a way for you to quantify what you mean by elevated volume or unusual volume? Other than, hey, we're looking at a chart and we can all see there's elevated volume on the chart?
Sure. Yes, there was a metric that I wrote a script for, and that was to measure the velocity of the prints. Prints having a minimum requirement of 1 lot, so 100 shares. And what I would do is measure each day after hours for the moving average of the 10 minutes leading into 5:15, the number of prints that, again, met that minimum requirement of 1 lot, 100 shares. So what the velocity of those prints were, and if there was a huge uptick in velocity, so the number of prints coming across the tape, then that was the indicator that, it's go time, more or less.
And so that indicator signaled on this day?
Correct. Dan and I were also watching this in real time. So, we didn't really need a number to say that this was happening. It was very clear on the tape. Reading the tape was a big part, if not the entire entry to this trade.
Yeah, and what you mean by that is the velocity of them paying the offers and the range at right around this time?
Correct, and how quickly it's coming across the screen.
But you did build that filter, which would have signaled if you actually, for whatever reason, maybe we're looking at another stock or we're doing something else, it would have fired?
Sure, yeah, that was possible, but there's no way I wasn't going to be hands-on with this every day. But correct, if I had not been watching, it would have gone off. We would have been able to tell that there was this unusual velocity in prints.
And so you were sitting around 5:15 every day for how long?
3 months, give or take.
That's great. And then you just started waiting. Okay. All right, good.
Yeah, so as the volume is diminishing, this volume bar is less than it had been before. Just decided to take some risk off in the off chance that this didn't have follow through. And then as we came in, we didn't cross the short-term low, and managing this position with others just was scaling out as the momentum carried the stock higher. There wasn't a real exit signal, but at the time, this was my largest trade to date, and I just wanted to be able to lock in some profits while the momentum was continuing. And to keep on small size, but was able to scale out slowly as we came higher. So improving on this trade, there were 2 portions. It was both the entry and the exit. The entry, this is a trade that doesn't come across often. The high probability of this trade is not something that I can come across and really say with certainty that it is worth the amount of risk that I should have put on. And not having added more size is something that pretty disappointed in, and I know that every other person who I've talked to who took this trade are in agreement with the disappointment that all of us had not taken more size on this trade.
Well, let me ask you this. Before the trade, did you think about how much you were going to risk? Did you game plan how much you would risk and where you'd buy it and run through that before this hit the tape?
Correct, yes. I had planned it out for quite some time, the exact numbers, but getting filled was an issue just because of how quickly it was moving up. I just did not properly prepare for how to get in more size.
So we talk about this a lot, right? Which is, we can all go back and look at trades and say, I would have made more if I got bigger. But what we encourage you guys to do is to go back and see whether you could have been bigger within your system. And within your system is the amount of risk that you can take on per trade. And so, the solution can't be, well, I'm going to just buy this 40 points higher and risk way more than I should. So given that, could you have risked more within a system that's responsible?
Probably not. I think the risk was appropriate.
Well, let me ask you a different question then. So one of the things that you certainly can do is if you research an idea, and we've talked about this a lot with you guys, if you research an idea or you feel there's an A+++ trade around the horizon, you can submit that trade to the desk and ask for more risk overall for a special opportunity. It's a special opportunity trade. So, let's say your overall risk is X, you can ask for 3X or 5X or 10X, depending on how good the idea is. Do you think in the future this could be a special opportunity trade?
Being as though Tesla is such a unique addition, and there have only been 3 in the past little over 5 years that I looked at where there was a company that had failed to meet profitability but had met every other standard for as long. So I don't know when the next time something like this would present itself, but I definitely believe, as you mentioned, this was a special risk scenario where I should have reached out and I should have asked for to be allocated more risk for this trade.
Yeah, let's talk about that a little bit offline. I don't know that I agree with your conclusion there. Again, I think a lot of times people see the trade that's in front of them, but they don't take a wider view of what the trade really is. And so one person could define this trade as a Tesla addition to the S&P. And we'll talk about this offline. I would define this trade differently. I would define this trade much broader. And if you do define it much broader, then it can become something that you submit to your risk manager for additional risk. I got to keep saying, I guess that's my fault. I got to keep saying that to you guys.
You said it enough. I just I failed to reach out.
Well, if you failed to reach out, it's still my fault. So while I'm saying it, apparently I'm not doing a good enough job making you guys feel good about reaching out. So anyway, go ahead.
To wrap things up, the exit strategy. This has been something that's been in the works for quite a while. I don't think this hit the mainstream news wires and the mainstream networks such as CNBC, Bloomberg. For a few minutes afterwards, there was a second wave where there was an increase in volume. The likelihood of a second leg was pretty high, and there were, in the other 3 scenarios where in which I showed earlier, there was the opportunity to even actually add more size. I just believe that the exit was, while I planned for it in real time, I failed to execute properly. I failed to keep enough of my initial size on for the full move.
Yeah, I just got to say something here, okay? First of all, this is a great trade. You should feel fantastic about yourself. You should be really proud of this trade. If I'm not mistaken, this is the best trade that you've made this is the best trade you've made here, correct?
Correct, yes.
And I would imagine it's the the best trade you've made in your entire life, correct?
Yeah, for sure.
You made the best trade you've ever made. Okay, and we always want you guys to get better. And you do want to look at the trades and think about how you can get better within your system. But the overriding takeaway from this trade for you has got to be, I did something fantastic. I did something special. This is a special moment in your career. I mean, this is terrific work. I would say, so I would not in any way be like, oh, I should have been bigger, and down about that part. I would have been like, wow, I made a trade that was my best trade ever. That should be 95% of what consumes my thoughts. And then 10% should be, all right, I'm going to make some more next time. But I do want to get back to that idea of widening the lens. To me, this is a research trade. To me, this is you found a way to use research to give yourself an edge. To me, this is you tapping into, one of your special talents, which is just extraordinary diligence. You really remind me of one of the really great traders at the firm who has that characteristic in spades. And I'll tell you who that is offline, if you don't know it by now. And that trader has made a career out of just being extraordinarily diligent. One of the great characteristics you can have as a trader. And what you did here too is you reached out to a senior trader. This senior trader is not on your team. He's on a different team. And so you also used your interpersonal skills. You showed value to another top senior trader who I'm sure is going to want to work closer with you and tap you for some other projects which you can participate in as well. It's all going to make you a better trader. That's all going to give you more opportunities with your trading career. And the number you made is not insignificant. That's a big time number for somebody. How long have you been trading live?
At the firm, about 10 months.
That's a big time number. It's a big time day. It's a big time day. No, it's absolutely. So that is how I'd walk away thinking of this. I mean, I'm super impressed with your work here, with the trade you made. Couldn't be happier for you. I can see lots of other trades like this that you can make that looking forward to talking to you about. So really well done.
Thank you, Bill.
And the guys and everyone else listening, this is a unique trade made on a desk by somebody who is young like you, coming up the curve like you, and found a way, took the initiative and found a way to do something a little bit different. This is a breaking news trade, but this is a breaking news research trade. Certainly took some of the principles from trades we talk a lot about, but put a different slant on it. And another way for you guys to think about adding to your playbook. So Jake, appreciate it. I know you guys all want to go back to trading Tesla. Tesla broke out again today. I know everybody wants to get some more Tesla, either in calls or position themselves long. So good day to be talking about this. But really well done. Thank you. Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comment section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.